Hey, good morning, everyone.
Hello.
I'm going to give you I'm going to give you an education and I'm going to go slowly. First of all, my name is DDA with DDA Mortgage. I've been doing mortgages for 37 years. I've closed over $1 billion, and like last year, I think I closed like 30 million given the market that it was at. So I love doing mortgages. This is not a job to me. 22 years ago when I met my wife, I was a Renaissance man. I was a guy that could do anything, fix everything, be clean, do all that. And 22 years later, she says, thank goodness you know mortgages. That's it. The Renaissance man is gone. It's just doing mortgages. So I'm really good at it, and I love doing it, and I love to help people. So we're going to go over some things that I think will be good. I got this little itinerary here. So one, again, I do all kinds of mortgages. It doesn't matter if it's FHA, if it's VA, if it's conventional, if you got to the commercial side. Michael gave me a call a week or so ago, and he had a property he wanted me to look, and it was all these commercial. First thing I thought was SBA loan for this particular buyer. Great candidate, by the way, for that. So we were always doing that. You have to always ask questions and use someone that's very knowledgeable. So you have to have a team. And who's on your team? You have a title company, you have your insurance agent, and you have a mortgage person. A mortgage person is going to help structure your loan and help you with that going on. You want to make sure that you have a buyer that can get a mortgage. Some of the things that you can ask when you're dealing with a customer, and I don't do the real estate side, but you may ask, hey, how's your credit? So if you ask there's three things in getting a mortgage. You have to have credit, one, and so just say to them, what are your credit scores? And they'll tell you, well, I'm like a 660. Where did you find your credit scores? Well, I'm on Credit Karma. Credit Karma is really excellent to see the movement going, but it's not accurate. Whatever they tell you, like on Credit Karma, like 40 points less for a real mortgage. But it gives you an idea, and that's kind of what you want to get. Hey, just curious what your credit scores are. Well, I'm an 830. Well, you're right, 40.790. You got some solidness. But when they're telling you that's in the 600s, then you got to be like, okay, that means we may be going below the hard deck, right? And so on credit, when I do it, I always look at, if I have under 680 credit score, I'm going to go FHA. Because on FHA, that won't affect the interest rates and it will get approved. Conventional's tighter than tight. You got to be above 680. So you want to make sure you have the difference on what kind of buyer you're dealing with. So credit is absolutely imperative. That is number one that you want to find out on credit. Hey, do you have anything bad? Is there any bankruptcies, foreclosures, judgments, liens? That's a big one. So like on credit, I'm pretty good at getting people better credit scores. I'm not a credit repair person. I know the basics. On credit, are the credit cards maxed out? I'm going to give you a lesson. One, someone says, oh, I have a credit card. I pay it off every month. See, what they don't realize is the previous month, the balance still shows up. And let's say they have a credit card that's authorized for $500. They put $500 on, they pay $500, but they're thinking they're beautiful. Or they have a $500 limit and they're putting $100 on, $100 off. And they think they're doing great because the bank told them, you're doing great, $100 off, $100 off. That is horrible because what happens is on credit, and I don't want to get too crazy on you, but on credit, if you have a $500 limit and you put $100 on, they go off of usage. They're not going off of 500, it doesn't exist. So if they put 100 on and pay off 100, maxed out credit cards, credit scores will suck. You got me? So when you have someone, you tell them on the credit card, max it out to 500, pay it off. The next month, put your 100 off, 100 on, because it's utilization rate. Is that helpful? So you're getting utilization rate on the credit card. That will help jack up your scores. Medical collections. When you see medical collections on Credit Karma, and that's what you like Credit Karma, not for the score, but when you do things, you see those adjustments coming. So if it goes up, that means your scores are going up. So Credit Karma is the thing to look at to see the scores moving. So on medical collections, if you pay it off to zero, nothing happens. You wasted your money. It's calling up for the medical collection saying, hey, I'd like to pay this off under the condition that you will delete it off my credit report. Do we trust anybody, yes or no?
No.
No. So what do we want to do when they agree to do that? We want it in writing. Because when I get that letter, then I can jack it up. Does that make sense? So we have that. And so when we pull credit, we have what they call a rapid rescore. I can't take it from a 500 to an 800, but I can look at what it can do to get us a little bit better on credit scores on a rapid rescores. But the basics.
Sorry.
It's okay. Utilization, remember we want to keep everything at 33%. Credit card of 500 that you maxed out at 500, you don't want to put more than 200 a month. And that scores will drive up. Is that helpful information?
Yes.
Then we want to get to income. We need the second part. You have to qualify for the home. Are you salaried? Are you self-employed? Right? If you're self-employed and been self-employed for 5 years, or 1099 for 5 years, the chances are really great. They'll only require 1 year return. How do we find that out? We do the loan application and we find out what the findings say. 1 or 2 years. So I've had it where I've done so many people where we know that they've been 5 years. We make sure that 2023 income is solid, and then hopefully we just have to use the 1 year tax return on that. Now, also, if you're W-2, you have that income as well, which is pretty basic. So you can't really go wrong when you're pre-qualifying someone, hey, what is your salary? But if they're salaried, they have what, a base salary of $49,000, but they get commission of $50,000. That was last night's loan application. But they had a 2-year average of 100 grand. Does that make sense? So you just want to kind of like not one and done, right? That they're consistent over a couple of years in case you need 2 years of tax returns.
What's the month that in the year that you have to have 2023's tax return versus 2022's?
Well, people keep it up till October, but the thing is if it's a good year, you want to get that tax return done. And oftentimes what I'll do on the tax return is I say, before you hit the send button, let me review the income to make sure we're okay. All right? I'm going to give you a secret today. Hello.
2022's tax return up to October of this year?
Well, no, I'm talking about you have to have 22 returns for 21, 22, but 23s you can go all the way to 24 of October. You don't have to file them until later, but if the 23 returns are great, you want to get them filed right away. Because remember, you still, even though you provide 21, 22, you still have to provide a profit and loss statement. They put a lot of value in that, and you can't lie and cheat and steal, so you're putting that if it's less. And you really don't want to see less income as a self-employed. If you see 15% or less, they're thinking, oh, he's going out of business. Make sense? So you kind of want to plan that going. I'm going to give you a secret. This is my big one. I'm giving it up front. Are you ready for this one? This is a no-brainer. I can't believe that loan officers don't know this. Are you ready? This is the big one. You always have a backup. If someone's 59 and a half or older and they have a 401k or an IRA, are you with me? They got a retirement account. You got a home run. So let's say I'm getting tight on my ratios, but I got this 401k, I got this annuity, I got that income. What do I do? Well, let's say they have $100,000 in their 401k. But let's say I need an extra $2,000 a month income to qualify them because maybe the social, the pension's not working or whatever they have, it doesn't work. So if I take $2,000, that means the financial advisor writes a letter that says, so-and-so is going to take a distribution of $2,000 a month, and then you put $2,000 in the checking account for just 1 month. That is income. So now you have that as income and you qualify. So how many months? You have to have 36 months. So what's 36 months? 2,000 times 12 is what? 24,000 times 3, you're under 100 grand. So you have the income to qualify. Does that make sense? That is a home run that nobody knows. So always keep that in the back of your burner. If they have a 401k IRA Roth, they're over 59 and a half, and they have 36 months of payments of whatever you need, you have it. Now, do they have to keep it going? No, discontinue it. The lender's not coming back and saying, oh, by the way, I want to check 12 months later. Are you still doing it? You still have your job? Your credit's still, it's over. You did what you had to do to qualify for the loan. It's not fraud, it's not lying, it's not cheating. It is income that you get to use. What you do afterwards is that, right? You could keep your job and quit it the next day afterwards. So that is income. So we did what? Credit. We did income. Now we're going to talk about what's the last one. Do we have funds to close? right? We need money. I'll tell you a couple of things. One, we're going to talk about first-time home buyers. We have the 3% down. Depending on the zip code on a first-time home buyer, they have to have an income, I think it's under 80 some odd $1,000, and they can see about getting like $5,000 extra. They get a better rate, they get a better PMI, 3% down, away to go. And then I do have an FHA loan. I'm not really crazy about it, but I'll tell you, you can go FHA. Let's say you have a $300,000 home. You put the 3.5% down, but they don't have any money. They're broke. So you take, I think it's like 5% of the purchase price, and it could be a second mortgage. So you can actually buy the house with no money down. But the market's changing. We're not 2021. And I'll tell you why I'm not really crazy about down payment assistance. I'll tell you exactly why. The rates are where today? In the 6s, right? So if rates are in the 2s and 3s, heck yeah, do the down payment assistance. You got a low rate. But if you do the down payment assistance, that second becomes what? A second lien on the home. We do know from listening to whatever BS they tell you that the feds are going to cut so many times, Wall Street thinks they're going to cut so many times. We know something's going to happen where rates are going to go back down again. So let's say you just did that 6.5% rate on that guy or girl, and you had the second mortgage, which is a lien, no payments. Well, it's time to refinance. Values haven't gone up. They're staying kind of status quo. How are they going to refinance when they got a second lien? They can't. They're stuck. Does that make sense? So I always think about the buyer. I'm looking at what today brings, but I'm thinking about tomorrow. So what else can they do? Well, I'm seeing, because I do a fair amount of business, sellers helping with closing costs a little bit, depending on the area. You got 3% down. It could be a gift of funds. It could be out of their 401k where they get taxed on it, but not a penalty. So they do have access, right? There is access to get funds and money. Does that make sense? When you do like that down payment, they usually jack up the rate on the first, and they jack up that rate on the second if there's payment or no payment. So you're kind of like then they're in a bind. So if things get tight, the government pivots, all of a sudden they print another 20 trillion, inflation goes up. What do? Food goes up, medical goes up, everything goes up. They're stuck in the 6s and this, you know what I mean? They're trapped. You got a trapped person.
You have a second down payment assistance loan that has no payment on it?
Yeah, there's two. I have one and I don't, but I really don't try to advertise it because I know refis are coming, and I know rates are coming down. So I don't want to be a one-time hit. I want to be able to get them again and save them money.
Everybody knows that you can go to Clearwater Housing,
Yeah, absolutely.
Housing, Pasco Housing.
Yep.
Your buyer can take the course, and they'll give them, and Pinellas, I know, it was up to $18,000
Yep.
for down payment assistance.
But remember, it's a second lien on the home. It's tied to it. If their 6.5 goes to 3.5, are they going to be able to refinance unless they pay off the debt? Got it?
So FHA loans, first-time home buyers.
Mhm.
Is it true if you haven't owned a home like 5 years, you can become a first-time home buyer?
But FHA's any time.
Doesn't matter.
It doesn't
Okay.
matter. It goes on and on. And then like on the assistance or the first-time home buyers, like whatever 3 years, whatever it is. Yeah. So you're fine there. So we did talk about down payment. We talked about income and credit. And what else we got? So one of the things that you want to have as a loan officer.
Before you go on. So I've got a first and a second on my house. I bought it yesterday for $100,000. 2 years from now, I want to refi and get up and lower my rate. What do they go off of? 80-20 or they go off of? How do they do
Well,
the rate?
great question. So you have, let's call it an 80 and a 20. 80% first, a 20%. You did it simultaneously. So that's considered one. You can refinance it. But do you have the equity? Are you at 100%? Are you at 110%? Or have values gone down? You're at 90%. So it has to tie in.
So what's the number?
Well, you got to be at least a 95% financing. So,
Gotcha. So
yeah,
you can
yeah.
refi 2 mortgages, a first and a second.
If
You have
simultaneous,
5%.
yeah, simultaneously.
Equity.
That's correct.
Okay.
You can't do a first mortgage and 2 months later get a second mortgage because that's considered a cash out refi. And that's like an 80% loan to value. Does that make sense? What you want to have, and this is like shocks me because I have my certain realtors that I work with, right? And they're like geniuses. I don't have to worry. So I'll give you 2 examples of what I just experienced. I got this lady who's a past customer. And so she was a past customer, called me up. I didn't know the realtor. And I'm a week before closing, she's buying a condo. And what did we find out? The dog weighed 40 pounds. They only allow 25 pounds. I'm not a genius, but if I'm gonna be taking someone to see a condo and they got a dog, I'm gonna ask the weight. So she lost her deposit, lost everything. Like, that was it. Like,
Crappy realtor.
bad. Like, that really
Realtor.
happened. So, you know, sometimes it's good to put it in neutral. I don't do real estate, so I can't advise or do. I do mortgages. That's all I know. And that's what I'm here to do, is be your partner. Paul and I, just a situation. It refers me to somebody. They had some backup offer on some kind of deal they really wanted. And I'm not a realtor, I'm a mortgage person. So Thursday I get a contract. They say, hey, Paul, we love you. We want you over. And they sign a contract, and it's $5,000 non-refundable. Who does $5,000 non-refundable? I'm not even intelligent. Who does that? So they wound up getting half their money back, and now they're going to go look. But it's just things. You just have to pay attention, and really, you have an excellent team with knowledge, brains, intelligence in this outfit. You got to ask. And so where I come in as a mortgage person, I don't know about dogs. I don't know about your I just know how to do mortgages. I structure loans for you 7 days a week. I will give you a pre-approval letter whenever you need it. I will do your pre-approval letter before you even sign that contract. I carry it with my laptop. I'm always having it with me in my bag. I have my laptop. I can bang them out and do them. So I'm here to help you. It's good to have teamwork. And what happens is you've got to have people that you can really work with. Your insurance company, do you get quotes on the weekend? Title company, do you have someone you can talk to? You know, do you have a mortgage person that you can talk to?
DDA, what do you need for a pre-approval? What does my customer need to give you for a valid pre-approval?
I want to know their income, credit, and things of that nature. And I go through all the things that we just talked about with 1, 2, 3. And I'm pretty accurate on it. I've never really messed up.
Saturday, you're at the car races, and my guy calls and says, hey, I need a pre-approval.
I just do it, yeah. And I have my laptop.
Just ask him and he,
Yeah, I just go through it all.
okay.
Yeah, because I can really tell, like, I could nail anybody here and tell you what your credit score is. I've been doing it that long.
Go ahead, what's mine?
Now,
Come on!
I gotta
You
ask,
said you could do
I'm
it.
gonna ask you personal questions. I'm not doing it here. And then I nail it.
Like a guess your weight thing.
Yeah.
So those are the things that you have. So you really want a team partner with you. I also attend my closings. I go to the closing. It's what happens is, if a loan officer doesn't go to a closing, what do you think that is? Any idea? They are fearful. They're afraid something's going to come up. And let me tell you, out of 37 years, I've gone to a closing. I'll give you a story. You ready for this one? Miracle happened. This is the biggest one ever. Anclote title, Julie. I'm at a closing. The realtor, the lady's buying a home. The husband isn't there. I go, where's your husband? He's on a ship in the Atlantic, way out there doing cargo, gone for like 2 months. I'm at the closing table. I'm like, oh, this is going south. I'm here. I'm like, this is going south. I'm gonna lose this realtor. Life sucks. Julie comes out and says, are you ready for this? She goes, let me think about this for a moment. On this ship, they have a captain. There's a captain on the boat. And on that captain, he is a mobile notary, a signer. No kidding. Now we're talking hour change and everything. She emailed the document on the ship. He signed what he needed to sign, notarized it, sent it back, and then Julie goes, listen, this is the deal. I don't need the hard copy to fund, but when you get back, please send me the hard copy so I can file it. I closed the loan.
Julie is fantastic.
Like honestly, I'm like, get out. And I thought, so really, people are afraid to go to their closings because it's the very end, but you should never be afraid and never have fear. I love going to my closing because who do I see there? You. Because you guys work out of your homes. You have your meetings, but I'm only blessed to have you here today, get to see you, but it's not like I'm going to run into you. So how do I get? I got to knock it right here, but my relation also solidifies a little bit further because I'm with you at the closing. So I'm making sure that nothing goes south, sideways, or anything, and we're there till the end until checks are passed out. Does that make sense? Mm-hmm. And so those are important. Let me make sure I cover everything, so I'm trying to do that. On the mortgage side, let's talk about how that works. So you say DDA. Thank you. These are great notes, by the way. I'm going right through one. How do I do when I do a loan? Let's talk about it. You get your verbal. What I do is I get that loan app in the system immediately. I take the loan app, I get it done, and then I run it through DU and LP. That's Desktop Underwriting and Loan Prospector. That's what the government uses to buy all the mortgages. You just need to put all the supporting documents. So when I run that loan, I'm going to know right then and there to make sure, because we're not going to wait a week before closing to have a problem, are we? We're going to know, just double check that everything's beautiful and life is great. So when I run that loan, what else am I learning? I'm going to find out if they need, what did we try to get away from? It's the value of the home. What are we trying to get done? The appraisal. Did we get an appraisal waiver? It's not DDA that makes the decision. It's not the lender that makes the decision. It's the government in their forms. So when we run a loan, it may say DU, appraisal waiver. Do we want an appraisal? No. Why do we not want an appraisal? We may get a really bad appraiser because I don't get to choose them. It goes to a third party and they use whoever they use. And when you have a bad appraisal, it sucks, right? Because you're never going to challenge that. So what do I do to compensate for that? I'll give you a little thing. I am a mortgage broker. I have different lenders. If I look at the appraisal and I've got the realtor lend going to me saying, DDA, this thing appraises, I'm not kidding you, this is so stupid. And it goes, and we try, I'll just flip it to another lender. I have everything. So boom, got done, get another appraisal done, and usually this flies right in. You do get bad appraisals, but if you get an appraisal waiver, you want to get it. So how does it go with me? One, that loan application's taken. So yesterday, the contract got signed with this lady, and I took that loan application at 2 o'clock, got it all done, and I said, is 5 o'clock okay with you? Send her the package at 5. I always go through all the numbers, the loan estimate, make sure they understand. I educate them, we go over rate, we go over everything. They electronically sign, and then they get a secure email to upload their documents. We have that loan submitted to the underwriting within days. It's not hanging out, it's not going anywhere. I can, like this one I had today, the one that had the dog that was 800 pounds, whatever. That one I'm getting the contract in today. And I got her another realtor, and the realtor says, hey, when do you want to close? I said, let's do 2 weeks. He goes, what? Yeah, I got everything. I got all the documents. All I got to do is send this package this afternoon, which I will. We'll sign at 5 o'clock. I got the documents, just need updated pay stubs. It'll be submitted tomorrow. And it'll be out of underwriting the next day. And I'm hoping it's going to get, she's putting down like 25%. So I'm hoping for what? An appraisal waiver. I get that appraisal waiver, gone. You know, close 10 days. Does that make?
How long does it take once you go to underwriting to get back?
A day. Yeah, because, you know, the market has slowed down, right? Because rates are up, business is down, so they go really quickly to underwrite. So you can really close like in 2 weeks, you know, doing it that way.
DDA, I'm looking through my phone and I don't see where you called me about that customer. Did you call me?
Yeah, we did. I got you the SBA loan, and I had that guy talk to your guy on there.
Oh,
Yeah, we had that all. And that's the other thing. You always want to have information. If you have people like you're working with someone and you only deal with this product, that's a problem. I haven't even discussed with you reverse mortgages. Now, I'll just throw something at you real quick. You get a guy from a family from up north coming down. They want a reverse mortgage. They're over 62 years old. You're looking at houses. They want to pay cash, and they have $300,000 to buy a home, but there's nothing for $300. Nothing. They find that home for $500, which is the home they really want. We do a reverse mortgage. What does that mean? We're going to put the money down that will put their age and what the down payment is, what they need. So they might have a mortgage for $200,000. So what does that mean? They have a mortgage for $200,000. That means as long as they own that home, they never have to make a mortgage payment. They have to pay the taxes and insurance, but they can live in the home that they want and never have a mortgage payment while they live in it. What happens? I'm not getting into great detail, but the interest gets added onto the loan. And watch what I say. I've been really marketing reverse mortgages. I think they're going to be huge down the road. I think they're going to be big for purchases and refis. And when you get a reverse mortgage, it's not DDA just selling you. You know, you have to take a government class, and they hit you really hard to know what you're getting into. So you have to take a class in order to go forward. So those are reverse mortgages. Yep.
So I wanted to say one thing. So about the application process. So when you're working with a mortgage broker, this is a little test. On the contract that we fill out and everything, and under the financing, it says if left blank, how many days does the buyer have to submit application for a loan?
25.
5.
5. So
They have
watch
25.
that, because if you got an agent that's actually really on you, and it's, doesn't say anything in there, and you're coming into a weekend, and granted, it's Friday, and nobody, if you're working with somebody that's with a bank or whatever, or your buyers say, hey, I got somebody from New York or New Jersey or out west, it could be no Friday, no Saturday, no Sunday. By the time they get on Monday, they're fogged because they've been drunk all weekend. The next thing you know, by Tuesday, they're now looking at the file going, no, we have to do application. So that takes a day or two. They could be over that limit, and if the agent on the listing side starts inquiring about this, they're gonna wanna see proof. We had an agent not too long ago just hammer him, which was fine, on the process, making sure application was done in time, making sure this was done in time, all the way up to loan approval, which that's a whole farce as far as he can get a loan approval with conditions, day one if he wanted to.
Right. And that lady really, she was after me, like unbelievable. It was drawn out, like you're on the phone. So
So watch with the application, and that's the first thing. And a lot of mortgage, and I don't mean to cut you off, but a lot of mortgage brokers out there, they won't even touch a buyer unless they pull application, pull the credit, do everything, Okay, go over why you don't pull.
yeah, so what happens is a lot of these banks, they'll pull your credit, right? Somebody remember, I got to do non-QM. It's very important. I got a few minutes left. Am I okay?
yeah,
Yeah. Non-QM. So someone remember. Where were we at? On the credit pull. That's what.
Can I just ask questions since I'm new?
Yep.
So on the 5 days, is that just that they have to be pre-approved?
No, they have to have the loan application taken. They have to actually apply for the mortgage.
Okay.
You never have to worry that because DDA is going to knock them out right when you tell me I have a verbal. I go right for the kill shot. I don't
You have
wait.
to have the approval level to even put an offer.
Right, the pre-approval letter, but they want the loan out. So,
Loan.
where were we at?
Why, when you do a pre-approval letter, why you don't
Oh
pull
yeah.
credit? Right
So
away?
pulling credit, like so these people pull credit, it drops your credit scores. How did I tell you? What do you ask? How's your credit? How do you know how the credit scores are? Then you can kind of place it. If it's really like iffy, you want to pull it, right? But if your buyers are really, they know exactly what's going on. Just remember you have the variance. It's never what they look at their credit card to Discover, their Capital One, the Credit Karma. It's going to be different when pulling a mortgage.
Could you do a soft pull?
Can do a soft pull, yes.
Okay.
All right, so get ready. Here goes the next part. I got the non-QM, but it was oh yeah. I want to go over non-QM loans. So we talked about FHA, VA. We talked about conventional, but we didn't really talk about VA. VA, just so you know, VA is 100% financing up to $2 million. You get 100% financing, zero down to $2 million. Seller does not have to pay any closing costs on a VA loan. Don't be afraid of it. Never be afraid of a VA loan. You don't have to be. They're great loans. Now,
You
let's
gotta make sure that your customer understands that just because they don't have to put a down payment down.
They have
doesn't
closing
mean they don't
costs.
have Closing costs.
So they do have closing costs, and you go over the closing costs. Now, on a VA, this is really interesting. On a VA, the appraisal's done. Let's say that appraisal comes in less. I had it on a refi and purchases. The appraisal comes in less. The VA appraiser has to give you 48 hours to say, hey, listen, I'm not coming with the value. Give me your information. You give the information, and they don't change anything. It still sucks. You can go directly to VA, bring your case. Not you, the borrower goes directly to VA, does it, and gives all the information because the realtor gives all the information to the borrower to give. The government can increase the value. The appraisal will stay the same. They're not going to change it, but the government will raise it up, the VA directly, and it happens all the time if the appraisal's there. I knew a realtor that bought a home for 1.8. Appraisal came in at 1.5. They did exactly that. Appraisal came back at 1.8. I had a refi. In fact, I'm closing this lady again, hopefully Friday or Monday. She had a refi. She didn't believe the value. She said, no, this is bull crunch. She went and got all the comps, went directly to VA, got the value up. Seriously, so you have that with VA.
Just VA.
VAs only, that's correct. FHA, forget it. You're conventional, good luck. So those are the things that you have. But VA does do that. VA is great. Why do you go VA? Because they have that opportunity. Yes, they have closing costs unless the seller pays the closing cost. You know, there's things of that. But let's say you have that sale, that VA buyer, seller's like, I'm not doing anything. I'm not helping these people. I'm not giving them $1, nothing. I, DDA, will use my commission to help pay for that. Does that make sense? I'll use my commission to say, okay, I'll take care of these fees, and so they can go with nothing. So we can do it that way. Does that make sense?
Perfect.
The other thing, let's talk about non-QM loans. You've got somebody who's a borrower, but they do great, but they write everything off. So they don't show any income. They're bringing 200 grand in, but they write it off to zero. What do? Well, you can do what they call a bank statement loan. You can grab the last 12 months business bank statements or 12 months. You grab the business bank statements. I do it where I grab the bank statements. It's usually like a 50% ratio. So if they're bringing in $100,000 a month in their deposits in their business, the income could be like $50,000 a month. It's a great opportunity. Does that make sense? So you can use bank statements to get that person a mortgage. Is the rate higher? It is. So you might be looking at 7 or 8%, but you can do it. Minimum payment, like, can be, depending on credit scores, 10, 15 or more down. So it gives them an opportunity to get a home and then get their situation changed. Also, on investment properties, I wind up doing that. I just saw the call coming in, these people that I do. They look at rental income. So on an investment property, you don't need tax returns, you don't need to put the job, you don't need to put anything. You can, as long as when the appraiser does the comps, if the income is that or greater than, if the rent is that or greater than the mortgage payment with taxes, insurance, association fees, you got a loan. So you have those things. So those are the things that you have that are available for you. So you have all different types of loan. If you deal with a bank that just does this, that means you've got to find out this relationship, that relationship, that relationship. I know all the different sources to go. Michael gave me this house and I really couldn't believe he thought it was residential. It said residential, the legal description residential, but there were commercial buildings on there and they're going to fly. So we thought, hey, what can we do? But I had the knowledge for an SBA loan, 10% down. Could get an SBA loan, even get renovations, things of that nature. It didn't work out because there's too many problems with that particular property, but I had the knowledge, I had the SBA lender with that borrower going over everything, so that was really pretty cool. Does that make sense? So you really want to have the knowledge all the way around because you don't want to have to, oh, who do I call now? I counted this guy, but he doesn't know, he doesn't do this. So you want to have that knowledge and stuff like that. If, you know, so is that helpful? To make sure I'm catching everything. Current market conditions, what do I see happening, what's going on? Interest rates are in the mid 6% range. So, I mean, does it suck? Yeah, but it's better than 8%, right? I mean, we were at the 8s. It is dropping. And it doesn't matter what the feds do. It's all bull crunch. It's what when they see the 2-year going down, it's going to be the 10-year. And the 10-year has been dropping. It went from, what was it, at 5% it hit, went down to 3.4. It's sitting at about 4%. So we'll see what happens in the information that comes out. My gut feeling thinks there'll be a time. It won't be little drops. I think something will happen that will make a pivot. Like it'll be a March 2020 event, but it's not going to be COVID. It'll be whatever it is, and I don't know what it is. I think rates will go down. The government has to refinance $7.6 trillion worth of debt. I don't think they can do it at that. They're paying $1 trillion in interest payments, and they're creating $1 trillion every 3 months. That's not sustainable. Something has to happen. I just use common sense. That's all I use. So I think there'll be an opportunity when the rates really come down, but then these buyers are all going to come out. They're all going to come out, and it's going to be nutso insano. So I think you really have a perfect opportunity to do really well because the market will change. Right now we're in that lull, January, everyone's kind of like done, hungover, whatever they are, but it's going to move on. Now, I would love to answer some questions as I look at that. Does anybody have any questions that I can answer for you?
I have a question about conventional loans and having a seller pay percentage.
Absolutely, let's talk about that.
Yeah.
So conventional loans go up to, I think, $766,250. So I'm going to ask you a question. So 5% higher than that, you could buy a home and have a conventional loan because you really want to stay in conventional. If you get into jumbo financing, you're looking at 20% down, higher rates. So you want to look at that. If you put less than 20% down, the seller can pay up to 3% of the closing cost. If you do 20% or more, it's 6% of the closing cost. If you do FHA and VA, 6% of the closing cost. Do you have 6% of closing costs? No, but you're up to those numbers. Does that make sense?
Yeah, so like I have a customer right now that is the mortgage person that they chose to deal with. They're just telling them that they have to get 3% or 2, and she pays 1. But they said that they would have to pay closing costs.
Fannie Freddie Mac says,
Fannie Mae is.
but they say 3%. That's the law. That's what they have. That's written in stone. 3%, less than 20% down.
Okay. And if they pay more than 20, if they have to do more than 20%, then it's 6%.
That's correct. Is that helpful?
Why do they have to pay that? Like, why does the seller have to pay that?
They don't have to pay it. It's, you have to negotiate it. Are they willing to pay that in your negotiations? So it's not mandatory. You know, we went through 2021 where it's cash, mortgages, you know, that was the deal. But I see more flexibility. That's the other thing. It's good for me to share. So everything was A paper all the way through. But what do I see? More FHAs, more VA. Now the doors are opening up. I see closing costs being paid. I see all of that happening. So it is changing. And that was my snapshot in time in 2023. 2024 will be another snapshot in time. Does that make sense? Yes.
You were mentioning appraisal waiver earlier. I think that's something we're all interested in hearing more about. You said something about 25% down. Is that like across the board?
No.
Or-
So like 20% down or so, you'll see appraisal waivers done. You know, 5%, you're not going to see it. 20% more, you'll see it down. But you just can't assume. Like I just did that lady yesterday buying a 334 purchase price, 140 mortgage. She didn't get an appraisal waiver. And I was like, whoa. So you don't know. Like this one I'm going to do that had the dog and all that. I'm hoping I get the appraisal waiver with the 25% down. So it's through the DULP findings. You have to run it through there, which I do automatically. Because I love when I can email like Len and say, man, we don't need an appraisal. Please get us out of this one. Right? Because it helps time-wise and everything going on.
Does a mortgage broker automatically run that through for an appraisal waiver, or do they, is that a no?
Well, it depends on what loan, it depends on who you're working with. Me, I'm an in and out kind of guy. I do my own. I don't know if that loan officer runs it. They work for a big bank. They take the loan app, they let them run it. It goes into their process and you get 8 million
So it's
people.
not automatic.
Right, no, you have to do it. So I automatically do it. So when I take that loan application, I'm not just taking the loan app. Before I send that package out to the borrower, I'm running it through the system so I know what we're dealing with. Is it 1 year tax returns for self-employed? Is it 2 years? Did I get an appraisal waiver? Do they just want one pay stub, one W-2? I know all that. Does that make sense?
What about the, not the appraisal waiver, but like a computer generated appraisal? Does that depend on down payment or like the age of the home?
There's new things coming about where they're doing, like I had with Rocket Mortgage. They didn't want the appraisal, but it was really weird. I did this as an investment purchase with Wendy Hoffman, and it was like a review, meaning they didn't want to actually go, thank you for bringing that up. They didn't want to bring somebody out there. They just had someone review the comps and stuff like that at the appraisal's office, and they accepted it. They actually gave more money. I was like, whoa. So yes, there's some like reviews, so you always have to ask. So when you're dealing with the loan officer, say, listen, what does it say? Well, we need an appraisal. Does that mean it needs a full appraisal? Is it a drive-by, or is it doing it? So you want to ask those questions because people get complacent, right? They run it, they're trying to get the next deal. But you want to find out because these are all variables that are factors. So great question that you had. Any other questions? Getting back to the rates, you know, like I read a lot of economists, they say rates are going to go up, going to creep up. My gut feeling tells me that with everything going on, that we'll wind up going down somewhere along the line. And I do think there'll be a lot of activity. So it'll be like refis for me, but purchases will really pick up because there's so many buyers ready to go that just, you know, they're coming out. But you have to deal in the 6s and higher prices. It's kind of like, you know, like I'm maxed out. Like everyone I'm dealing with just on most are maxed out. Like I'm butting like right up there, you know? So it's kind of tight. So I noticed that there's a lot of that.
Because the interest rate is too high, the value of the house
Yeah,
is
there's
too
a lot
much,
of variables.
their debt to income
Right.
doesn't-
And they're trying to get the
where
house
they
that
go.
they're comfortable in. I always sell, when I pre-qualify someone that you send me, I never max them out. Remember, I've been doing it for 37 years. What happened in 07, 08? What happened in 99? What happened to all these people losing their homes? I never do that. My first question is always, when you give me a referral and you ask me to pre-qualify them, what is the mortgage payment you are comfortable with? What are you comfortable with? We know we have a probability that this payment's going to come down, but what are you comfortable with today? Does that make sense? And I also educate them about what's going to go up the next year. Property taxes. I want them to be aware. 23 years ago, I bought $1 million home, and there was no $1 million homes. I don't have that today, but I mean, I bought $1 million home, and the taxes were $9,000. Flood insurance was like $4,000, and I was 41, popping out kids, and the next year, the taxes went to $18,500, and my homeowners and flood went to $12,500, and guess what?
Ain't your house no more.
Yeah, no, my house no more. So, but nobody educated me. So I always like to educate them, say, hey, listen, this is where you're at today, but we know where we're going to be next year. Like Paul has one, he's going to look at some homes today. The taxes are $420. I get stoked on it because I get to use the $20 a month to qualify. But I'm also going to educate to say, hey, you know, next year this is going to change, right? Does that help out on that one? Also, shop insurances. I always tell them to shop insurance after you get what done? Home inspection, your 4-point. You don't want them calling insurance companies right away. If they don't have a 4-point, they're going to get these quotes. They're going to start freaking out. You're going to be like, they're going to want to get out of it. Get your 4-point, then make your phone calls, then call. Here, I'm giving you 3 names. Go to your realtor. Go to your Uncle Bob. Go to your parents. Go to whoever. Call and shop the insurances. Do that. So that's very important as well. Make sense? Let me make sure I got everything. Cause I know you guys got other thing going on.
So the process, so I think everybody wants to hear so you got a mortgage broker, the team that's behind you. So a lot of times you get how many different people that you're dealing with. And you get an email from the mortgage broker, and then you get an email from this person, an email from that person, and everything.
I got
Chain of command.
Yeah, so what happens is I take the loan application, I use sales tracks to process the loan. They have a system called Arrive. As soon as it's in there, it shoots out emails. This is what we're looking for, this is what we need, and it keeps the realtors and everyone up to date. So you know what's happening with that file all the way through. I don't need to call you and keep you updated. You know what's happening because the system that we have is in place to educate you and keep you informed all the way. One of the things you want to know, and we're going to go over pre-approval letters when I get phone calls from listing agents, so remind me on that one. So one of the things that you want to do is very important that I like, and remember, there's nothing like sitting in a closing and you have to wait for what from the title company, from a funding number. Dude, that's horrible. When business was crazy, you're sitting there, you got the buyers, you got the realtor, and you're waiting for what? A funding number, and that person at the bank, the lender went off to the bathroom or had a break or had a heart attack or had something going on, and you're waiting and they're all looking at you. I remember in the days I'd have to like go ahead and email, I have all their numbers. Come on, I'm looking stupid here. But now I'll go with like a Rocket Mortgage. They send the wire that night, I go there that morning, they don't want a funding number, right? So like what I want to do is I have a closing Friday morning, and it's in Brandon, they all want to go to Clearwater to the house. I'm trying to get, hey, can you bring the checks? Because you don't need a funding number, you don't have to do all this crap, you're funded, go home, be like Ferris Bueller, it's done. So that's the deal on that one. So you know the funding numbers are kind of crazy because when you're looking, and I've done it, right? I've been there. And I just really avoid having to have a funding number, right? A lot of times I'll get a call from the listing agent. A great listing agent will call me to find out, what do we got going on here? And so that is really a key in making deals work. I think you and I have had situations where, not to give me any credit, but I kind of sold the deal on the financing part, not the real estate, but the financing where they felt comfortable. What do I say when I have them calling? How's your credit? Well, the credit scores are excellent. Income's there, real simple, nothing convoluted, straight down. I'll let you know I do a DULP approval that day, so you'll know that right away. I said, by the way, you can always get a hold of me anytime you want to get an update. You're going to be in our Arrive system, but you want to call me, you just call me and I'm here for you. So I try to give them the confidence because, the market's changed, but you still could have multiple offers on a hot property. They really want to feel comfortable. So I really try to take that time. If it's Saturday, Sunday, whenever, it doesn't matter. I always take the calls. I try to make the listing agent feel so comfortable, so great in doing that. And I'll say, hey, when are you planning on closing? Well, we got 45 days. 45 days? Why so long? They try to turn them on in every way I can, right? Because I want to make sure that deal comes together. So you got to really know when you have a loan officer working, Are they taking that call of that listing agent? If they've got a bunch of offers, which is a changing market, but when things change and it gets back to that again, can they get a hold of your loan officer? Because they're going to call the next one. Because they're all got their offers in there, they're going to call, and if your loan officer is not picking up the phone, they're going to call the next person and their loan officer, and if they get that vibe, they're going to sign the deal. You always have to be. I mean, it's just crazy. We're living in crazy times. They're like everyone's impulsive, immediate. Everybody wants everything now, so they really want to know what the deal is, and I get that a lot. They'll call, and I'm like, hey, I'm so glad that you called, and like the one that we had, that lady, which was so insane. I finally said, I'm going to change my attitude because she was really annoying me. I said, no, was she annoying or was she annoying? She was like annoying. And I said, you know what I'm going to do? My attitude changed. Right here, right now. I'm going to be friends with this lady and I'm going to talk to her. Found out she had a 60-foot sea ray. Found out that her husband, they go boating. They head down to the, they're always boating. I love boating. It turned me on. And next thing we're talking, she's sending me pictures of her boat. We're having a great conversation. And I said, you know what? I don't want her to bother Len. I want to keep it free. So I said, I'm going to do this for you. I'm going to personally update you. So when I found out something, I texted her. And she was happy. Never heard from her. And then we went to the closing and it was done. And that was it.
This was a VA loan.
Right.
So, not that it was meant anything, it was just she was more skeptical about the whole thing.
Got no money for a house, but I got a 60-foot boat.
No, that was the listing agent. But no, this guy, the borrower, excellent credit, loaded, he could have paid cash for the house. He did the VA loan because that's what he wanted. But no, the borrower was incredible.
Listing agent, I want to ride on his boat.
No.
I can see sitting in the bathtub.
So those are things that you have. So before I end up, if I can get your business card, that'd be great if you don't mind. So what I do is this. I take your information and I put it in a HubSpot so you get a video and I educate you. It comes out Monday at 8:45 in the morning and I just give you 1 minute of information. And really what I'd recommend, I'm not a marketer for real estate, I do mortgages, but my videos have been really powerful. This month in January, I closed a Facebook and a Google. And the Facebook that I closed, no, I'm not kidding you. The Facebook that I closed did not have, it was not a realtor referral. It was not someone that knew me. This guy was looking for a mortgage broker, right? He had his realtor lined up. He was looking for a mortgage broker and everyone had all their fluff and whatever he said. He goes, you just gave a minute video and you weren't even asking for business. You educated me. I got hooked onto you. You gave me information. You're my guy. Got the mortgage. And then Google. A lot of these people have their realtor and the guy Googled. Guy called me up. Yeah, like my office is in Largo. I'm on West Bay Drive. So when I do everything, I market Largo and boom, 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 and all my stuff goes there. He says, listen, I need a mortgage. I'd like to do business with you. I saw your stuff. I got the loan. So it was 2 deals that I closed that I would not have got through social media. So like I do Facebook, Instagram, like all that. But see, when I got taught how to do everything, I do everything myself, I had them go to Rumble, Pinterest, TikTok. Do you know on TikTok, every video I do gets approximately 450 views, every one. Like I noticed my Facebook is dropping off, but TikTok is 450 on everything. So I just inform people and give them that information. And if you go to my website, which I'll give my business cards out, if you can pass around, that'd be great. But on my website, I have like what I do when I go to a closing. I'll just say, like when I go to this Friday's closing, I'll say, hey, do you mind? I do always a minute video. So when I get done, I give them a 1 minute video. And I always remember something personal about them. Hey, by the way, I want to say thank you so much for the business. I'm really grateful. It was great working with you. Great seeing you at closing. And by the way, don't forget, on your mortgage statement, you got to go give it 30 days. You can go online and use your old password to get your mortgage statement. And don't forget to file for your homestead. And I'm always here for you. Any questions, please let me know. And I'm going to send you a review in the next email. So I send a review. Now, when you ask someone to do a review, come on, we're going to find your review. They're going to go look it up. I send them the link. Hey, here's my link. Would you be so kind to do a review? I think I got like 370 on there. But you got to remember, with everyone I do, what does it do in my presence? It lifts me up more powerful. So I'm always doing that to have that in there. Does that make sense?
I'm going to give you a review that says this picture's from 1984.
You know what? I actually updated that. It's probably like 10 years, but I had the one when I was 29 years old. I looked at the one that I was 29 and I said, it has to get updated. So that with that being said,
This is your son,
huh?
right?
Pre-approval letter. So on the pre-approval letter that we send out, like I said, the listing agent will call on that pre-approval letter. They will call. The good ones will call you. And I always welcome their calls. A lot of people are too scared to talk to them. Not me. I'm always aggressive. But on the pre-approval letter, you know, great point. I don't like to do a generic one. You just wipe your butt with it. Who cares? You don't have a property. You don't have any. Oh yeah, you're pre-approval for $1 million. Are you really looking at that pre-approval for $1 million with no property, no nothing? Does everything related to the property you're dealing with? I like to do them specifically. So how do you do that? Well, you got to be available 7 days a week. So when I get to do a pre-approval letter, I'm doing specifically for that home at the price they're offering and the loan amount. And they go, well, what if we got to do a bunch more? I said, all you got to do is call me. I'll send another one. I'll send another one. Keep negotiating. I'm here for you. So I do that for you 7 days a week. You're not going to wait till Monday on a Saturday offer. You want it that Saturday. You have to have it that Saturday, and you have to have your loan officer ready for that phone call. Does that make sense? Did I educate you today?
Yes.
Did I go pretty slow? Was I okay? Because I can turbo speed.
You could have gone faster for me.
So again, we do all products. You have a commercial loan, ask me. You've got a residential, I'm here. And like one of the things that, oh, I know what I want to talk about. Yes. Let's talk about mobile homes real quick. Mobile homes and land. Seriously, if you've got condo on there, could be a problem in a legal description. I had a young, who was it? You're Nikki. So we did look, the one that we had that's conventional was expiring when? February.
Yeah.
So if we were going to do it, we had to do it in January and get it done.
Right.
Right? So that's what we had to do and get that one taken care of. So you want to make sure, co-ops. I don't do co-ops. I don't have it. I don't have available co-ops. Co-ops are in New York. Is there financing for co-ops? There are. I don't have it. But if you're really dead hard on a co-op, you're going to stick them in there. You go to the listing agent and say, listen, you're a listing agent. Where do you go get the co-ops, right? Land leases on top of the world. I don't do land leases. I don't have them available. They're getting tighter and tighter. Like on top of the world, they even got more stuff going on in lawsuits because they're always having something going on in the rec house. Not to say it can't be done, but they're there. So I don't do the land leases. So you really, like, he's going to go look today. I love the mobile home and land that you have. I can't do the mobile home with no land.
Right.
Mobile home with land, it's fee simple, right? And they're really hard. The lenders are hard on the appraisal, not the borrower, on the appraisal. So you got to make sure if you're doing that home, that it's looking pretty darn good. Like you don't want anything that's going to be like questionable. It's not like you're going to get some kind of half-retard mobile home. It's going to work. It's not. All right? Oh, I got one more. I got it. You ready? Is that okay?
Oh yeah, I got something else.
Hang on to it because I'll forget, so I got to go. One, I can do renovation loans. You're getting a house. That house doesn't have everything. We have a house that's either an FHA 203K or a conventional renovation loan. What is that all talking about? We have a home for $200,000, but the roof isn't going to work. The air conditioner is not going to work. They love the house. They want to get it. They only got a little bit of money down. So the roof, the air conditioner, 40 grand. I'm making it up. So what they do is you do your contract at 200, you get it done. I do a loan based upon 240,000. So 3.5% off of 240 is the loan amount I'm going to do. So then I get the financing done. We have the licensed contractor. If you're going to do a renovation loan, get the licensed contractor up front. Get ready to go. We don't have time. It takes time to process everything. I've done where it's been a whole big thing going on where they're doing all kinds of stuff. Because one of the things that I got to do when I do that loan, I got to get the builder, the contractor approved. I got to get them approved up front because I can't get them approved. I'm kind of boned.
Right.
So I'm getting them approved to get things going. So we go through the process. The loan closes. Seller's gone. We got 40 grand. Then they get the work done. They send the receipt of being completed, and then they get paid until it's done, right? But there's extra fees. You know, on renovation loans, you know, a little bit higher in rate, not much, maybe a quarter of a point, you know, from 6.5, maybe 6.75, not a big deal. And you're gonna have like draws. Like, so if they gotta have like 2 payments, you have to have the draws for each payment and then the title update on each one, right? So there are some more expenses on that.
Has it gotten easier? The last time I did one, it was a full-on.
No, it's okay. As long as you just got to be on it. And it just takes your 100% attention to get it from A to Z, you know? I do construction perm. So, you know, someone's buying a home, they have the land, they want to build it, and they want to build on their home. If you have that going on, you want the builder all lined up. You want to buy the land. If you buy the land, go to Regions Bank, Credit Union, get the land loan until you figure out the construction perm part, okay? But construction perms are there.
What about the 203K on half retard mobile home?
No, no. Question?
Edit
No,
that out.
no, that's just out the door.
Man, do I love those retarded mobile.
Do you forget it?
So condo questionnaires and what to ask or what to know going in.
Okay, so let's talk about condos. Very important. Thank you for bringing that up. So if you're buying a condo and you're doing it, if you put 25% down on an owner occupied or 30% down for a second home investment, it's called a limited review. On a limited review, we're not going to look at the budget bylaws or declaration. We are going to do the condo questionnaire. So you want to make sure on the condo questionnaire, I had Tony Millick, he called me up. So in this condo project, there's 4 units in a building, however many buildings. There was 2 buildings that caught fire and burned to the ground, and they're building up. He says, can I do financing on this one beautiful building that's got complete? Found out no. Why? Because it wants 100% completion of all units and of course the rec center. So I had to find that out. On your condo questionnaires, you got to make sure that everything's in tune. Now, this is where I beat. So was it your deal? No, it was somebody else's deal. Okay, so Pete Dorian, he does these condos down on the beach, and you know, they're like, they can't go Fannie Mae, Freddie Mac, right? Nobody got a Fannie Mae, Freddie Mac except who? Me. How did I do it? So they were putting down like 25% down second home, or 30% down on that second home. So what did I escape? I escaped the bylaws, the budget, because see, we're gonna get to the budget before I go. So then I escaped all that, but then what else did I got? I got an appraisal waiver. So the appraisal waiver, he couldn't state how many units or this or that, so I got that out of the way. Then I had the condo questionnaire, and then I had the home, there's some kind of inspection that needed to be done. So I told the realtor, his name was Perez, I said, you get with that inspector, you make sure that my numbered units line up with what you have on this condo questionnaire. I need everything to match. He goes in there, he gives the information to the guy, he matches it up, and I closed the Fannie Freddie Mac loan in that place. I did, first one, right? So you always have to think, not do anything illegal, don't cheat or lie, cheat or steal, never. You always want to like think things through.
Now
because
that happened, that other people can get.
yeah, I can do more. Yeah. So it's coming. So they're popping up. And then what else? There was,
Well, the condo questionnaire on what's involved, so you have a limited review.
Yep.
Versus a long form.
yes.
So the limited review, what's some of the questions that are still on the limited?
Like, is there anything incomplete? Are they finished? Are they paying? This is something I think is scary a little bit. Are they paying their maintenance fees every month? You know, you don't want to see too many delinquencies going on. So those are factors that can be affected in some way, shape, or form, right? The number one deal killer, always remember this, the deal killer is a lawsuit. Maybe someone died on the I had that one. They died. So there's a lawsuit. You got a lawsuit going on, forget it. You ain't going anywhere, right?
Now, a lawsuit could be against, is it the HOA?
Yep.
But if it's against one building of, say that there's 20 buildings and the lawsuit's just on one building, not the.
Yeah, the other building you should be fine on. Yeah, so you always want to kind of keep that. I want to teach you something about budgets. How much can you put down on a condo? Put down 3%, it's fine. On the budget, what you need to know on a budget, if you have to do a full doc, and this is where I beat everyone out every time. There's another little secret. This is a good secret right here. When you're doing a deal and you have a buyer or you're the seller, the first thing you want to do, because you don't know if they're putting 25 or 30% down, if you have to forego and you have to do a full, you want to look at the approved budget. Now, when we have condos doing financing, we have a 2024 approved budget already to look at. On that budget, there is a line that says reserves. That reserve has to be 10% of the total income coming in or expenses because they match. So if you got revenue of $1 million, you have to have reserves of 100,000. Now, this is where DDA got burnt and couldn't do anything about it. You got reserves for $99,999. Is it going to work? No. because it's 9.999%. It's not 10. No flexibility, and those people are pricks.
Make a $10 donation to the HOA.
But does that make sense what I'm telling you? So you have to make sure, always I look at the budget, because you know what? This is what I learned, so way back. When you're doing a loan, remember you'd approved it. We're looking good, aren't we? Got the appraisal, out of underwriting, everything's going good. But is the underwriters doing the condo review right up front, or is it in the process going towards the end? You'll find out a lot of deals get killed 1 week before closing because they're looking at the budget, go, you ain't got the money. No. So you as a realtor need to be educated. So I will do this for you. When you have your next condo and you say, DDA, you're a nice guy, but I don't do business with you. Still, give me the budget and I'll teach you. We'll look at it together and I'll show you how it looks. You always want to look at the budget if you're having to do a full review on a condo. Make sense?
And then when you're talking, oh, go ahead.
Oh, sorry. So for conventional Fannie Mae, they require 110%, like the 10% over 100 for the loan, for the budget, sorry. That's what I'm finding, is that
Now the budget, whatever your
they
budget,
have to be funded 110%.
it has to have 10% reserves.
Okay.
So it's 10% of the total. So if you're bringing in $100,000, you have to have 10,000 reserves, not 110,000. In that 100,000, there's a 10,000 that's a line for reserves. And then you're finding a lot that we're seeing is like, association fees are going up, insurances are going up. So you have an association fee. It covers the building if it blows over and blows down, correct?
Right.
But as the lender, we want to get what? We want to get the H206, whatever it's called, H06, inside the unit because we want to cover the inside. So even though you have your association fees for $500 a month, we still want you to have insurance for inside the unit if anything goes sideways in terms of that. Does that make sense?
So like, are you foreseeing issues with condos with this whole milestone budget? Like, do you think most of them are gonna be cash? Like, are you guys concerned with the whole financing aspect with condos?
Well, what's happened is they had to do that engineering report, right? So all of a sudden they had to go ahead and jack up their stuff. So you want to find out that the engineering report's been done and they've got everything calculated in there because of that one condo that went down in Fort Lauderdale. So now everyone has to get that engineering report. So a great question is, hey, did you get the engineering report done? Are we good? Are we in good shape? Is everything accounted for? So you want to kind of know what's hidden because you get them in that project and all of a sudden it winds up being a South deal. Who do they remember that got them in there? You and me. We go down. You know what I mean?
Could you ever foresee, like in the future, the whole buyer's agent commission? Could you ever see the buyer's agent commission being rolled into the back end of the loan?
That's never going to happen.
No.
They're not going to do that. You have 3% down, 5% down. They're not rolling. What are they going to? How are they going to do that? They're not going to be at 100%. They got to have some skin in the game. I do not ever see that happening ever. Not at all.
Good thing we're in the weird state of Florida.
Yeah.
Chances are low.
I don't see that happening. Not at all. Next question. Am I doing okay? Am I educating you guys? Anything? You?
In your experience for the waiver appraisals, I know you said sometimes it's not 100% guaranteed. Is there
Not 100%, buddy.
factors that make them stronger for that besides?
I think they do have other variables. Quite frankly, I don't think it's just a loan to value. I think they look at reserves. I think there's everything in that model. You know what I mean? But they do have a database. Like Fannie Freddie has a database that's huge. So they're going off of that. I don't know that to be for certain. I'm telling you, my gut tells me there's other variables that go in there.
One
Well,
thing,
that's condos, what about single family homes?
Single family homes pretty much, yeah.
what I found more is the more the buyer has into the game, money-wise,
Yeah.
the more lax everything's gonna go. So if somebody comes in with 3%, they're gonna be tightened up.
Yeah.
Yeah.
If somebody's going in and putting 40% down,
Yeah.
everything becomes loose, and I've seen more appraisal waivers with people putting in 20, 25, 30%.
Yeah, that's that. Yes, you have a question.
I heard if you put, I heard this from a mortgage person, when you go to put the information in the DU, and you put the zip code, and that 4-digit that people hardly ever use, if you put that in the system, it automatically waives the appraisal.
Really? I don't know that, but you
But I
know,
heard-
now I'm gonna,
A brokerage guy, he said, he said, that's how I was able to do all my stuff. I never had appraisal. He said, I
I'm-
put the 4-digit.
hey, you taught me something, I'm doing it today.
And after I put the 5-digit, I put
Hey,
the 4-digit
I'll-
in and.
I'll let you know because I got one today. I got that 40-pound dog I
But
gotta,
nobody ever used it, he goes, but that's the trick, he goes, that's my trick.
Right.
Put the 4-digit in after.
yeah. Yeah, because I don't think because when I do the zip code, it has just a space for the zip code, so you'd have to do a hyphen and put the rest in there, because there's not a section for that extra 4. You'd have to, I'm gonna try it.
So, I mean, that's what I. that's
What I'll do is I'll
he did.
email Len.
He bypassed everything with that craziness.
I'm gonna email Len, I'm gonna do it. I'll put the hyphen in the last 4 in there. Because really, when I get the zip, I just get the zip, nobody,
So
what?
try it, I'm interested to know.
Yeah, I'll try it, yeah. What else can I do? Anything else? So,
Real quick, so on listings, so everything that he's told us about what needs to happen, whether it's with HOAs, specifically, we're talking about condos in this aspect.
Yeah.
As a listing agent, all this stuff has to kind of go through your mind a little bit before listing, because of the fact is you either A, with the sellers, need to gather information, look at the budget, do this, do that. Because when you get an offer on there, it's gonna make your life very easy to sit there and go, we got an offer coming in with 3.5%, which means what? They're gonna do a full review, which means they have 8% of the,
Yep.
the reserves coming in. They already know that that's not gonna fly.
oh, on a condo, just to share with you, it's coming. So you can do spot approvals on FHA, but remember, like, and I've got them, I've done one. I did one like a year ago. So if a condo is not FHA approved, which most are not, you can do a spot approval. But what do you want to look at first? What's the first thing you want to look at that I taught you guys? Right, with the budget. You want to make sure the budget's there to do it. But I have done them where you can do a spot approval. Not too bad, but I have done them. You try not to, but if you have to, you do it, right?
And when you're getting listings, especially with condos, okay, I don't know how to say this. It'll make yourself look even more if you're in competition trying to get the listing. On talking to the sellers on what you do behind the scenes to get this, to make sure any offers coming in for them, we're not gonna go under contract, and the next thing you know, the budget's gonna blow this thing up. If you start educating them a little bit, I can guarantee you 99% of any other agent that's coming in there trying to get the listing is not gonna go over that with them.
What-
That'll make you, even if you just hit a couple bullet points of what you will be doing for them, when you get offers in, it'll make you look like a rock star that really no agent's gonna touch on. Because I've learned very young in this, probably 2 or 3 years after the fact, DDA has shown me a lot of tricks, not only in help getting the listing, but also being able to, when I get offers in, being able to scan it, to be able to say, okay, I already know that there's 8%, coming into the reserves, and they're coming in, so it's gonna be a long review, this ain't gonna fly. And I can go right to the agent and say, I've done my due diligence, or I had that conversation before with the buyer's agent, because the fact of the matter is we can probably work things out before we get the seller involved and present it, because if things blow up, what's the last thing we hate? We hate the seller looking at you going, what's going on? You're bringing me through this roller coaster ride, and, why are we going through this?
Right.
So think about it on the other aspect too, on the listing side, as an agent giving that seller all this information. Try not to overwhelm the person, but also educate them on a couple bullet points that you're gonna do for them, because the last thing you want is this thing to be blown up.
And FHA, single family homes, you got it going on, you got the deal done. If there's peeling paint, get it cleaned up. Don't go FHA. They don't want peeling paint. They want a functional home. It could be old carpet, old bathroom, old everything. As long as it's a functional home, that's what they care about. But if you see peeling paint, come on, know now. Get it done. You're the listing agent. Listen, in case we get an FHA loan, we got to get all this cleaned up. Conventional doesn't care. FHA does. That's their little thing. Cracked windows, things of that. FHA is a great loan. Why do I go FHA? Below what credit score? Right. And what if the income debt ratio, they go up to 55% income debt ratio versus a conventional of 50. You know, so there's flexibilities of why I'm going that direction. They only have 3.5% down. They don't have the 5 if you can't do the 3. So there's reasons why I do that. I don't do it to make more money. I do it because that's what's going to get the financing done. Okay? Oh, by the way, I do flyers. If you have a listing, you got to go to my website. No, just email me on my business card. Email me and say, hey, I would love to have the flyers. When you have a listing, Rate Plug sends it to me from MLS, and you have a color printer, you print them out. I'll do a nice little flyer. It has you up there, me down below, and I'll show the rates, the payments, what's going on. So you have all that, which is really great to have. Sure. All right, so that's free, no charge, no nothing on that. Any other questions? Think it while it's here. Yes?
You mentioned some programs, but what are are there any programs right now for buyers, like besides just first home, just in general?
Not really. It's just financing. You have to, like if I didn't mention it, but we're in Pinellas County, but USDA has 100% financing, but you have to be in a rural area. And you can go to the website of USDA to find out if that house is there. It's 100% financing, no monthly PMI. So you do have that available, but we're here. So that's going to be infrequent at best. Okay?
I'm in Hillsborough, so.
Yeah, Hillsborough, depending on some addresses and things of that nature. So again, I'm just going to finish up this way. You have to have a team partner. You got to work together as a team to get from A to Z. And that's what we're here to do, right? And I just educate the borrowers regardless. I don't care if they did 10 mortgages or 1. I still go through the loan estimate. I still go over everything to make sure everyone's on the same page. When I give them an estimate, it's always a little bit higher. They'll always bring less. You never want to lowball them, because when you go to closing and you got to bring more money, they're looking at you, they're looking at your realtor, and they're like, I got to bring more money. You never want that. So like the title charges are a little bit higher because we have to be careful with the Dodd-Frank bill. It's got to be a little bit higher. So I explain, it's not going to be this much, it's going to be that, but they're always a little bit higher. So that way you don't look bad, we don't look bad, and you referred. We always want to keep that relationship tight because it's going to be a reflection on you. Always remember, you are the person referring. It doesn't matter what an incredible job and who you are and how incredible you are. You got a link that lets the people down. That's a reflection on you, okay? Last little story, and then I'm going to go. This really happened. So I'm doing a loan, and I'm 1 week before closing. The lender calls me and says, we can't do this deal. I said, why? Well, the listing agent's blackballed. I go, what? The listing agent's blackballed. They did some fraudulent things with our company, and we will not take anyone associated. I go, my buyer is from Publix, a manager. My realtor is like a friggin' stud. He's beautiful. I mean, that's all legal. And he goes, no, we can't. I had to flip that loan and close it in 7 days, right? And they had the rates. And then the rates were a little bit different. And I went back to that listing agent and I said, listen, dude, you're going to give this buyer money so I can match what I have here because I got booted because of what you did. So I got that in the contract. They told them what we needed. We got it, and I flipped it and closed it. But out of 37 years, I never had, and all the crookery and shenanigans that they did in 07, 08, and all that, I never had anything like that. That was the first time. That happened like in December. You think that and you're like, like, you know what I mean? So you never know. So just be prepared. As we go through the year of 2024, you're going to get a lot of things that come out of 38% of U.S. companies are laying people off this year. It's a fact. It's a statistic. They did it. 38% are laying off jobs. Just laid me off. So I just had another realtor call me up. He goes, I just got this letter saying they can't close, lost his job. I said, well, probably did. I got to show proof. I said, you know, the guy lost his job. He lost his job, you know. I don't think people make that stuff up.
So with a lender, if the milestone is not passed, where does the lender stand on that?
What do you mean? Say that again?
So the milestone report, which is the engineering report that
Yeah.
comes back.
Yeah.
So say that there's issues with that, and it doesn't come back, and it doesn't pass the lender status, or the milestone's not passed because there's work that needs to be done. Is the lender have anything to do with the milestone engineering report? Do they need to see that, the underwriter?
No, I don't think so, no. We don't look at home inspections. We don't look at those kind of reports. It's just, if there's an appraisal required, we do. We don't, and I hope I'm answering your question. We don't look at any of that stuff. Like people go, Like people go, "Hey, let's talk about it, like a roof. But let me answer your question so I get to the roof. We don't look at a milestone report. I don't know what that is. Never heard of it. So,
Engineering,
huh?
the engineering report for condos, 3 floors or.
Oh no, I don't think they. Oh, you're talking about the condos again. No, sometimes they could ask for it. Yes, they could ask for the report. I've had that happen. They're getting tighter. So yes, to answer your question, absolutely yes. They want to see it. If they have it and it's done, they want to look at it. They want to know there's no skeletons going on. It's being addressed. I know I had a railing situation on one. They want to look at it. It wasn't a big deal, so they let it go through. But yes, they want to look at it if it's done. Yes, to answer your question.
So if it's not done,
You could have a
will
problem.
lender,
Yeah,
okay.
yeah, it could, say no, Hey, the other thing is, so one of the things you say is you have a house and you say, well, the roof needs to be replaced, but it doesn't show anything, so you're fine. Hey, if we don't need appraisal, we don't know. If we have an appraisal, he does the appraisal. He's not going on the roof. He's not a home inspector. He's looking to make sure there's no leaks or anything going on. What is the one thing that you have to get? You have to get insurance. So you got to get your 4-point in order to get insurance. So always remember, it's not us. If you're having a problem, you got that roof, you know there's a problem, it's got to be the 4-point to get that roof so you can get insurance on that home, because in order to get the right price of insurance, you got to have a 4-point to get that done. Make sense? I think I'm done.
Are the appraisers coming back with FHA or VA issues on those type of loans once they do the appraisal? Or is that pretty much gone away?
Gone away. I mean, yeah.
They don't care now that there's rotted soffit or?
No, FHA does. We were just talking about
VA
it.
and FHA.
Yeah, you're done. Conventional is not so bad. FHA, I said, if you got rotting wood, I got a VA loan I'm trying to close now Monday. It had a little bit of rot in the door. They did it, sent pictures, did all that. You got a letter. They said, well, the roof needs to be replaced. Got a letter that says the roof has 3 years, everything's fine. These are old leaks, no big deal. So I'm just trying to get that signed off on. So yes, VA, FHA, anal, conventional, not so. Like I said, we talked about painting, peeling paint, stuff like that. You want to make sure that you're making sure that it's all clean if you're going to get an FHA, VA. And they're all great loans, by the way. I don't know why everyone got choked up in 2021. They're beautiful loans. I mean, you can't really discriminate. Get an FHA, VA loan. I know you want cash or you want 20% down and someone's left testicle. I got it. But FHA, VAs are still very good loans, And they're great. And you really want to help people. I like how many VA loans were getting turned away because they were going to get a conventional because they're afraid. Everyone's always fearful. Don't be fearful. These things are in place. As long as you know how the game is played, FHA and VA are wonderful, absolutely credible loans, feeding the needs, right? So that's it for me. Anything else?
Thank you.
Thanks, guys. And just email me if you want a flyer. That'd be great. I can set you up, so every time you get a listing, you never have to call me. I do it, and you're all there.
Oh,